Hello, everybody. Welcome back to another Market Open. It is Wednesday, April 17th, 3:46 p.m. And we are here on another day in the markets. Today was a very, very interesting day. And the reason today was interesting is because I'm looking at the S&P 500 right now at 501.39, down 0.43% on the day. Is that bloody? Is that red? Yeah, that's red. Now, granted, it's the fourth negative day for the S&P 500. It's not a 2% day. It's about a 0.5% day down. And yeah, that's red. And I'm looking at a lot of other stocks right now. Nvidia's down, Red's down 6%. Uber's down, Bitcoin. We'll talk about Bitcoin. That one's down. Palantir's down. But they're not as red as they were before. And that is the interesting to see right now. The S&P 500 at one point today was 498.4, and it rebounded all the way to 503 right now here at 501. Robinhood itself today it's right now at 1713. It was at 1630 at one point today. And so what's really interesting right now in terms of at least what I'm seeing in regards to how the market rebounded, and we'll talk about why this happened and what's going on, why the market was red, but it kind of bounced from the depths of the red that we saw. The market you're looking at right now on the S&P, this was much worse than what we're looking at right now. Even Tesla at one point today got to 153.12. Right now, as you can see right here, 153.75. Right now, Tesla at 156. It got as high as 158. Even they got eaten up on the dip. Now, not, it wasn't a huge dip buy, but still, it is down as well today. United Airlines up 17% right now. They have had a phenomenal day. They had really good earnings. ARM Holdings, we talked about them over the past couple of weeks. They're down 11% on the day. And DJT, it's just a crazy day all around. This thing's up 13%. So in general, it's been a very, very interesting day in the markets. We'll break down what's happening in the macro. AMD's down about 5% on the day. MicroStrategy's down 5%. Bitcoin fell below 60,000 at one point. But the TLDR is that although it was red, it was not as red, I think, as it could have been given how bad we fell around 12 p.m. in the day. By about 2 p.m., we basically started to do a little bit of a rebound. We're going to talk a lot about what's going on in the markets. Let's start off with Tesla. I think what's happening with Tesla right now is incredibly interesting. More updates on Tesla primarily consist of the fact that Elon Musk continues to say that he is going to go balls to the wall when it comes to autonomy and robotaxis. The India news, that is a rumor that's not confirmed yet by the company, but it does seem like they're going to be building a factory in India, and Tesla will be investing $3 billion. The stock started to struggle today and then started to rebound. Here's a clip I found that I thought was really interesting in terms of the dichotomy between how investors are thinking of Tesla right now. What's the bull case to buy? What's the bear case to buy? And let's take a look at this, and then we'll keep going from there.
No governance. There is no independent voice on the board, where they've gone out and made an acquisition like Solar City, right, to stop it from failing because it was his brother's company, and because the federal government told SpaceX, you've got to stop buying Solar City bonds with the money we're giving you for R&D, where he's tried to buy, use Tesla to buy material for his house, the windows, where he wants a $55 billion pay package, and where we saw Jack Dorsey with 2 companies. We've got Elon Musk with multiple companies that all require his time. Plus, there's the allegations, and we saw it on Joe Rogan's broadcast, of drug use. So how's a fiduciary own this company with anti-shareholder governance repeatedly, time after time after time? Isn't it worth just passing on this and going to something you don't have to explain owning?
Yeah, well, I own this personally, first of all. This is a personal position. So I think, we love to own broad-based ETFs for the majority of our client base. So this is not a fiduciary decision. This is my decision. And so I think that, what you're pointing out, these things, I think you just don't like Elon. And so I think that if you separate yourself and say, look at this company, well, I think that's the truth, right?
I'm not showing sentiment. Everything I said is a fact, Bryn. It's a fact.
I know, but he's a grown man, and the Joe Rogan thing is just strange, and that was years ago.
It's not just Joe Rogan.
So I think that if you just
which I agree, critiquing his drug use is, there's a lot of things to critique his drug use, but that is probably not the right thing to do.
Look at the company. If you look at the company, and when you still look at the 2 companies where the best engineers want to work, is our SpaceX and Tesla. Because this is not an Elon show as well, although it feels that way. He has to be able to retain top talent. And I think as it relates to Tesla specifically, being pragmatic about the company, as I said, the chart looks terrible, and they are in a very murky situation right now because it feels like, are you going to be a car company that's balancing higher revenues, higher earnings and margins, and then also innovating at the same time with full self-driving, more energy and robotaxi? Or are you going to do a full pivot to robotaxi? I think if they come out and do that, that's a revaluation of the name on the downside, because that is probably 5 to 10 years out. So
and by the way,
I think that,
by the way, sorry, Brent, if this is principally a governance related story,
That's one aspect of it.
sounds like it's a major one. However, you could, right? It's major.
Even put that aside, the fundamentals deteriorating. We've hit limit in terms of the EV adoption. They've got the oldest EV lineup in the industry globally. They've got 20% of their revenues coming from China. We've seen what China has done. Okay, we've seen Apple move their supply chain to India. And they've got better relationships and longer standing relationships with the Chinese government. We've seen China. China is supporting their domestic producers that, by the way, make newer, more richer in terms of the accessories, in terms of basically even the range. So of their cars than Tesla. That's number two.
Yeah.
Number three, we've seen Elon just tweet out, oh, no more prices, we're raising prices. He lied. They're cutting prices. We would say big robo-taxi announcement. We secured funding for the take private. The guy is a pathological liar to keep his stock price up. So forgetting about that, the fundamentals deteriorating. You've got lots full of EVs that are selling at major discounts from the major auto players that couldn't sell them. So the fundamentals are horrendous.
Yeah. So I think that in China, they actually,
no, let Brent go.
one more thing. It's like one more like buzz line. It's like, once again, you just don't like Elon, by the way. And so it's like when you look at
genius. I've said that repeatedly.
When you look at the EV market, they're actually continue to be with BYD the top selling brand in China. And so when we look at America, which is about 9% of the EV space, China, which Tesla was it's like the only manufacturing company that was able to build in China autonomously without having influence from the Chinese government. He has a very strong relationship. I believe they're about to announce they're going to be building their next gigafactory in India, a huge untapped market. And so I think that when you look at this company in the U.S., if this was a U.S. EV story, I would not own this name. I don't think Americans want to drive EVs in.
So I think that gives a good perspective on the people that are more bearish towards Tesla and the people that are more bullish. Now, look, the bear thesis, he did a horrible job of laying it out. I mean, he just did ad hominem attacks at Elon that I don't think really will, really matter at the end of the day. The bearish argument on Tesla right now, quite frankly, is that we know unless Elon puts a rabbit out of his hat, which is going to be either the Optimus bot, which, I mean, publicly, we haven't seen really major progress on. By the way, we got to look at Boston Dynamics. They put out a new video today about their new humanoid robot, or Robotaxi, which he said he's going to unveil, but most likely is not going to scale until FSD becomes 100% perfect, not 99.9% perfect. And that's not near 100% perfection yet. What does Tesla have left? There's nothing super bullish to be there. Now, I've said I think the stock could still rebound here because I think a lot of the bad news could be baked in. And as a result of that, investors could just buy it to buy it, right? Like, I mean, we're seeing this with Trump's SPAC today, right? Like, this thing's up 16% because it was down 18% on Monday. However, on a fundamental basis for Tesla, unless they show there is something unique besides the adoption of Optimus or Robotaxi at scale, because none of those are material yet, the cars and the margins on the cars and the deliveries and Tesla Energy, that's not going to be something that moves the stock. There's not a huge bull case there right now. So I think the question becomes, going into Q1 earnings, what does Elon do in regards to persuade Wall Street to put the Robotaxi in their valuation models? If somehow, and maybe that's the rabbit he pulls out of his hat, can get Wall Street to be like, no, you guys are dumb and you guys are not recognizing the opportunity. And the Goldman Sachs of the world are like, actually, yeah, we're pretty dumb. We really don't recognize the opportunity. We're going to buy up the stock. That's how I think the stock can rebound. I tweeted this just now, and I do believe in this. The question is, can Elon make the world believe in this? A $25,000 car seems kind of dumb. The more I think about it when it comes from Tesla, It's going to have a crappy margin. It's going to compete with the Civic and the Corolla. If EV demand is already struggling, you know, the $25,000 Tesla is definitely not going to be the easiest thing to buy in regards to all the different competition that exists in that mid-market lane. So going for robotaxis, it's way more riskier, 100%. But isn't that the point of Tesla? Isn't it to be a tech company, not an auto company? And an auto company would focus on a cheap car. A tech company would try to literally create the technology that makes you not have to drive the car. And so from that perspective, I think it's obvious what route they should go. I just don't know if, I think all of us know as smart investors, we want the robotaxi over the M2 because it just opens up so many possibilities. The problem is it's dead money until robotaxis scale, and robotaxis don't look like they're going to scale until FSD scales. FSD is not scaling probably for like another year or two, if that. I mean, to get this thing to be perfect, to get this thing to be, you get in the car, it takes you to Dunkin' Donuts, you don't have to worry about dying while you're in the car. So from that perspective, I think it is going to be a little hard for Tesla to navigate this, and Q1 earnings next week is going to be really interesting to see how the hell they navigate this. I know some people still think the M2 is a good idea. I don't see the bull case for it. I don't see why building a $25,000 car is exciting at all. If you're telling me the future is autonomy, which Elon has said over and over and over again before this whole robotaxi drama started over the past 2 weeks, then why would we make another car? Like what's so valuable about it at the end? I don't know. I don't see it. If that to me is just like what a GM or a Ford would do, not what a company that's worth now below 500 billion at 495, but something that's worth 10x the auto industry. I think they would be worth, or they would be trying to do something a lot more ambitious than that. Granted, we're going to see how that plays out. Speaking of Elon, he is not talking about Tesla at all on Twitter. He's talking about bringing back Vine. Do you guys remember Vine at all? Do you guys remember Vine? The TikTok before it became TikTok, the 6-second vertical video streaming platform. Yeah, Elon's saying, hey, should we bring that back? And some Tesla shareholders are probably upset because the stock is down 40% year to date. And Elon's talking about bringing back Vine. Some Tesla investors don't care that Elon's tweeting. Nonetheless, he is tweeting. And it will be funny if they try to go up against TikTok and like that's his next, or up against Instagram, right? That's his next kind of ambition here. But that is what Elon's tweeting about. He is not caring about EVs, at least today on Twitter. He's tweeting more about Vine. All right, what do we got with the S&P 500? We got the market closing in about 2 minutes. Tesla right here, 155. DJT, I don't know why it's up 15%. I have an odd feeling. It's just a theory. Oh, by the way, you remember that Warren Buffett secret stock that we've been talking about for the past 10 months? I think I have a feeling of what it is. I could be wrong. We're going to talk about it today and see if there's any value to it there. It's interesting. We're going to look at it. Steve, a good friend of the channel, he put out a really good article on it today, and I was talking to him. We were both digging at the financials, and like, it looks like Buffett knows something. He could still be wrong in it, but we'll talk about that after the market close and see what we have going on there. I have a feeling the reason DJT is being bought up is because maybe the guy that owns a ton of TikTok who wants Trump to win so that Trump doesn't ban TikTok is buying the crap out of DJT. Maybe that's the reason. Jeffrey Yass. I could be wrong about that. But I mean, it's either degenerate gamblers today that are buying DJT, MAGA supporters who really want to support Trump and they're buying his stock, or it's political influences that really want Trump to get elected and they know that if they pump up his stock, he has a better chance to get elected. It's one of the three. And at least today, the bulls on DJT claim victory as the stock is up 15%. 4 p.m. Wednesday, April 17th. Thank you, everybody, for being here. The stock market is now closed. All right, markets closed. JL says, Amit, should we vote in favor of Elon's new pay package given recent dismal performance? I cannot tell you if you should vote for his $47 billion pay package or not. I will be voting yes, because I think the guy deserves every penny, if not more, for what he's done with Tesla. I'm someone who supports founders and entrepreneurs, so I'll be voting for that. The stock's dismal performance, I don't think is a reason why he doesn't get that, because he took the company from A to B, and you got to reward him for that. Also, it's still a 10x from where it was in 2018. So I would be voting yes. I think he deserves it, but you'll have to make that decision for yourself. Tesla right here, 155.43 on the day. DJT up 16% on the day. Palantir, 2130. I did buy 5 shares of Palantir and 10 shares of Robinhood. I got Robinhood at 1695, got Palantir like 2150. So bought the dip on those two companies right here. Palantir, 2130. IWM, 192. That's down because rates are not coming down anytime soon. So the Russell's down. QQQ 425. QQQ was at 440 last week. Right now here at 425. S&P, again, it's red on the day. It was uglier than this at 12 p.m. There was a bit of a V-shaped recovery on the S&P and on a lot of other stocks today. So it's not as red as what I think we all thought it could have been. ARM definitely had a bad day, down 12%. United, just phenomenal day, up 17%. They absolutely crushed. Their stock is close to where it was at the peak in 2021 now. So United right here at $48.77. NVIDIA took a fall today, down 4%. SMCI, they took a fall, down 2%, even though they were up 10% over the past week. So that's not that crazy. AMD, I don't know why AMD got clobbered, but they're down 5.78% as well. They got a price target upgrade to 225 the other day, but right now, not necessarily doing the best when it comes to AMD. Reddit also 39.15. They fell from 46 over the past 2 weeks. Now they're just $5 above their IPO price at 34. So holding on there, but we can see if that one comes down. And then we'll talk about Bitcoin in a second as well. Bitcoin had a horrendous day. Actually, let's get into Bitcoin right now. Let's look at the Bitcoin stocks. So let's look at these Bitcoin stocks. Bitcoin right here, 61,134. Why is Bitcoin down? So we talked about it a little bit in the morning. The biggest thing is that the ETF inflows are disgusting. Like the ETF inflows are absolutely atrocious. I don't know. Well, I mean, I do know that. I think the ETF inflows are drying up because people have to pay taxes and because people are getting scared, right? When people get scared of crypto, they're not flying to crypto to buy it. And so with the geopolitical crises we have going on right now, it's just bad. These inflows are not good. And the grayscale selling is not stopping. It's not even getting any better. So as you can see right here, BlackRock, they brought in 26 million, which is whatever, not enough to keep Bitcoin continuing to go higher. Bitcoin at one point today fell below 60,000. Now that dip was eaten up relatively in minutes. I mean, it stayed there enough time for people to tweet a picture about it, and then it was gone. So it's not like it was there for a long time. I think smart money was indeed buying the dip today, especially before the halving event, but 61,195. As a result, a bunch of stocks took a bit of a tumble. Coinbase, 213, down 2%. CleanSpark, actually a little green today, 3%. Some of the other some of the miners gotten so beaten up that they had kind of nowhere else to go but up. Marathon as well, up 0.21% of the day. MicroStrategy took the biggest hit. At one point, it was almost at $1,000. So it was down almost like 7-8% of the day. Right now, it's at $1,188, basically $1,200, down 5.26% of the day. Same thing with Robinhood. Robinhood fell to about $1,630 today. Now it's at $1,714 after hours. So a bit of a V shape on a company like Robinhood as well. And I think it's when the market started rebounding, a lot of people started buying some of the stocks that they believe have massive catalysts, like a MicroStrategy, like a Robinhood, and that lessened the pain for these companies on the day as well. And so that's what we were seeing right now. So that's what we got in the context of some of these crypto companies as well. Lila says, waiting for Palantir to go to 21, and then I will go back in. I don't think that's a crazy price target at all. I think, at this point, we're 30 cents away from 21. That could definitely happen, 21, 28. But I do think, DCAing around this 21, 20 range is not crazy. Below 20 would signify to me a legitimate downtrend for Palantir. And at that point, we would be kind of in that Tesla category where it's a falling knife, right? Tesla went from 180 to 175 to 170, 165. Then it stayed there for a couple of weeks, then finally broke down below 160. That would be the trajectory Palantir is on if that does happen. And if that does happen, I think that would be because Q1 earnings suck or because there is something macro driven. And I think it's more likely macro because I think Q1 earnings are probably going to go very good for Palantir. Max 7, Microsoft down a little bit on the day. Apple down below 170 on the day. Meta 494, down 1.12%. Meta was at 530 last week. So Meta was definitely down 156.94 on Google. Amazon 181. Amazon was at all-time highs on Monday. Nvidia 840, down 4%. And then Tesla here 155. They bottomed out at 153 here on the day. And that's pretty much what we had in this market. Nothing too crazy, but it was indeed a red market. Again, it's just if you weren't keeping up with every part of the market, it was more red than how the day ended, as red as it ended up becoming at the very end. Now, one thing that's interesting about the 2-year, when we look at the bond market, the 2-year is 5%. The interest rates right now are about 5.5%, right? So the 2-year Treasury bond is signaling to the market that you are too high. The question is going to be, does Jay Powell get ready to give us that at least one cut before the election or after the election? I think given the inflation data that's come out over the past couple of weeks, it's going to be hard for him to justify it. But we can tell he wants to do it. And the 2 years telling us that we probably should do it. But we're going to need to see a decline in the 10-year and, quite frankly, just CPI that's at least close to 3.1, not 3.5, not almost 4%, in order for Jay Powell to definitely get to the point where he's going to have one rate cut. So as Tom Brady says, April showers bring May flowers. That might happen as well. And that rate cut by Jay Powell maybe is going to be delayed until September, which is what we're seeing. Yes, Ty Gordon's comment right here. Bank of America said that Wall Street may be pushing out rate cut expectations, seeing risks that they don't start until March 2025. I kind of think Bank of America is just saying this to get some cheap shares of companies. Like, I don't think Bank of America legitimately believes we're not going to get a rate cut until March 2025. Is it possible that it takes that long? Yeah, because if inflation doesn't come down, Jay Powell's not going to cut. Like, I know everyone thinks he's in collusion with Biden, which, maybe we do get a cut right before the election. But at the end of the day, if inflation's at 3.6, 3.7 headline, there's no way in hell Jay Powell will give us a cut before the election. If we're at this CPI and this core PCE before the election, I just don't think he could justify. There's just no way. Like, I don't think it's possible. So we would have to see CPI again come down to 3.1, 3.2 to even think of doing it, which is way above the Fed's target of 2%, which I don't see happening. But if it does happen, it would be interesting to see how that plays out. Okay, let's talk about this Warren Buffett secret stock that's been on everyone's radar. If you know Buffett, he asked the SEC for special permission to not disclose a company he's been buying. I want to talk about this. Steve wrote a great article today. I'm going to put it in the chat, and anyone can check it out. If you want to support Steve, you can click on it, read through the article. I thought it was really interesting. I would be careful of opening a position in this company. Let me repeat, I do not have a position in this company. I think there's still a decent amount of risk in investing in this stock. But, I mean, just from the public disclosures I'm seeing, Warren Buffett has 40 million shares of this company. Sirius XM, the radio company. Warren Buffett has increased his position by 351%. He has 40 million shares, about 1% of the company. They added 60% more shares than they had over the past month and 351% over the past 6 months. SiriusXM is an audio streaming business with 34 million paid subscribers. Does anyone here in the chat, we have 700 people here, does anyone subscribe to SiriusXM? If you do, please comment. I'm so curious if anyone subscribes to this thing. Howard Stern is the biggest star they have on the network, and live sports audio, which will become important in a second, is also very important to the business itself. Now, as you can see right here in Q4, this was one of the top 3 buys. He owns a $3.2 billion stake through Liberty Media, which is a separate stock. So we have to be careful when we think of Siri, which is a $3 stock, and Liberty Media, which is a $25 stock. He owns a bunch of shares in between all 3 of those various versions of SiriusXM. And he increased this position in 2023 at the end of the year. And we're going to see in about 13 days what his new position is, because the 13Fs and 13Gs should be out pretty soon. And so that is the company that I'm thinking about. Some people here say, I love it, I just renewed. Vince has it, Steve has it. Wow. A couple people actually do have it. Interesting. Can't get it over in the UK, really? Maybe you can't get it in your car, but I would imagine you can get it on satellite, because it's an internet subscription at the end of the day. I would imagine, Layla, you can go to their website and still be able to get it. So Sonny says Berkshire gets a lot of insider information to make those purchases. I'm not accusing of Berkshire having insider information. I'm just saying, for someone to have a 351% increase in their position, it kind of feels like they know something about SiriusXM. So here's a part of the article that Steve put in that I thought was really interesting in the context of just their financials. So Sirius has 34 million paid subscribers with a 1.6% churn rate. That means every year, 1% of the 34 million paid subscribers, I think it's like $10 a month, I think, actually cancel their subscription. Siri is also able to capture in revenue, ad revenue, and generated $1.76 billion from advertising revenue on top of the $6.87 billion in subscription revenue. From a business standpoint, an acquisition could make sense for a larger company that has a streaming platform like an Amazon, especially in the live sports audio place. As Siri could be an extension of content and revenue generation, it would also expand a company's foothold in sports, which is becoming more of a battleground. Now, let's look at these financials. This, to me, was the most interesting part. And I've been talking about this since last year. I've compared Sirius and Spotify many times. I never thought of Sirius as an investment, but I've always looked at Spotify, and the valuation is really interesting when you look at Sirius versus Spotify. So in 2023, Siri generated $8.9 billion of revenue and captured the lion's share from $6.87 billion in subscriptions and advertising. Spotify did about 10 or 12 billion in revenue, so not that far off. Sirius operates at a 48% gross profit margin, and it generated 4.3 billion in gross profit. That's more than Spotify. From a profitability standpoint, Siri has an operating margin of 22% as they generated 2.3 billion in operating income. Their top line earnings in form of EBITDA came in at 2.58 billion, which is a 28% margin. They drove 1.2 billion in free cash flow and 1.26 billion in net income. They made more money than Spotify. Sirius's valuation is 9 billion. Spotify's valuation is 60 billion. And Spotify did not make $1 billion in net income in 2023. I think they made like 95 million or something like that. Now, Spotify is a different animal. They're a growth company. They're, more focused on like taking over the world when it comes to the audio space. So it's a little bit different, but it brings into perspective the multiple investors are willing to give to Spotify, obviously growing more, obviously a tech company. So there is that contingent variable to take into account. But Sirius is still in the audio space. They're making more profit than a company like Spotify, and they're not getting the type of premium Spotify's getting. I think Sirius right now is a 9 PE on their company. Is Amit playing the Tesla earnings call on the stream? It's not today. It's next week. So yes, Michael, next week we'll be listening to it live after hours, after the market close. Now, as someone says right here, the stock's down 40% year to date. That's another thing that's interesting to me. I don't know if this is the bottom for SiriusXM. And if you look at the chart over the past 10 years since they've IPO'd since 2012, it looks horrendous, right? Like it does have a 3% dividend, but they have not given friendly shareholder returns. I mean, let's look at the stock right now. It's not been, the best stock to own per se outside of the dividend. Year to date, it's down 43%, but that could also speak to why Buffett's interested. Buffett, he's not supposed to be buying at the top, right? He's supposed to be buying at the bottom. And theoretically, one could argue, is this the bottom? 43% Sirius right here. If we look at the max trajectory, they IPO'd. Oh, so this one's showing the 1994 part, but they did a re-IPO around 2012. It's not performed really well. Dot-com bubble, it blew up, and then, it hasn't really recovered ever since. And then it's just given a dividend to keep investors excited. There's nothing super exciting here, dude. I think like maybe this thing shoots back up to $5 or $6 if everything goes the way Buffett wants it to go. So it's not like you're buying it and it turns to $30 and it's a 10x. But I did want to bring it to people's attention because why is Buffett increasing his stake by 350%? I mean, there has to be some arbitrage play, in my opinion, that he's seeing that the rest of the market is not seeing, or that he allegedly has certain information about. And as a result of that, maybe it is an opportunity to look into in the context of SiriusXM. Imnop says, if they go bankrupt, are their assets worth more than the share price? The share price is implying a $9 billion market cap. I don't think they have more than $9 billion in assets. I could be wrong. I haven't gone through the financials that deep. However, they did $1 billion in net income. They're not going bankrupt. I mean, like I don't see that happening. They did $1 billion in net income in 2023. Even if they grow that marginally, even if they stay flat in 2024, you're doing $1 billion in profit. You're not going bankrupt, right? You're in pretty good position. And then on top of that, Sirius's moat is that they are the premier live audio sort of one-stop shop when it comes for sports in particular. And then they have the Howard Sterns and the politics of the world. They have all these different subsidiary networks inside of SiriusXM. But live audio is something that people care about. Now, it's interesting, right? Like I used to think, who watches Mad Money on, Jim Cramer? I'm sure some people in the chat maybe watch Mad Money. I don't watch Mad Money. Sometimes I tune into it here and there because I have YouTube TV as a subscription now. But I asked myself, a couple months ago, like who actually watches Mad Money, right? Who sits there at 6 p.m. and waits for Jim Cramer to come on? Not because anything bad against Jim, just the idea of someone sitting and waiting to watch a TV show, it wasn't factoring in my head. And then I'm catching myself every morning watching fucking Squawk in the Box. And I turn on the YouTube TV thing, and then you got Sorkin and Becky Quick and all these guys. And I'm like, wait a second, I'm doing what I was critiquing I'm doing the exact same thing, what I thought no one did, which is like watch TV. So I also think we have to broaden our perspective. Who listens to live audio streaming for sports? Not me, because I don't care that much about sports, but there's 34 million people that do, right? 34 million people that pay for the Sirius subscription. So I do think there is a massive market in the context of Sirius. I'm not the demographic for that market, but Buffett maybe sees a broader demographic or an acquisition target for SiriusXM, just like he did with Activision, Blizzard, and Microsoft, where there's an arbitrage opportunity. And as a result of that, that's why Buffett might be a little bit more excited. The stock was at $7 in July 2023. That's when we started talking, by the way, about him disclosing these stakes via his 13Fs for the secret stock. Now, is this the actual secret stock? I don't know. I'm guessing it is. I could be wrong. But I think in the next 10, 15 days, when we get the next 13G, we're going to find out, what is that stock? And it might just end up being SiriusXM. So Katie says, I watch you every day. Well, see, that's the other thing, right? Like, I also realized everyone has their own content niches that they consume. This is the beautiful thing about the internet and how it's democratized content, right? There is a certain subset of people on the internet that tune into me, right? And that enjoy watching and obviously just laugh their butts off because the humor is beyond imagination. So there is a segment of the population that cares about my content. There's a segment of the population that cares about Jim Cramer every day. There's a segment of the population that listens to Howard Stern on the way to work. There's a segment of the population that watches Cramer or watches 60 Minutes on CBS, right? So like, there's all these different niches of populations that consume content. There's people that watch Twitch streamers play video games. That's not the most exciting thing to me, but there's 60,000 people a night that'll watch a streamer. So content exists in so many variations. And in the context of SiriusXM in the audio live streaming space, it seems to have plenty of variations. And that's why Sirius seems to be attractive, at least to that live audio market. One other thing I wanted to say on SiriusXM in their financials here. Yeah, so this is the comparison between Sirius and Spotify. Let's look at this right here. This is very, very interesting. So Sirius's market cap 12 billion, Spotify 59 billion. Revenue 8 billion versus 4 billion, or basically 9 billion, 8.9 versus 14. Gross profit 4.3. Look at this. Sirius has more gross profit than Spotify. Their margin is double than Spotify. Their operating income is 2 billion. Spotify lost 90 billion. Operating margin 22%. Spotify is negative. So the finance, obviously Sirius is not the company Spotify is, but from an audio perspective, this is not some dying dead company that can't compete with the Spotifys of the world. They have a subscription and advertising base that is thriving. The question simply is there a real opportunity here in the context of some type of acquisition, or what could happen for growth in the stock itself? One more thing, Sirius purchased 1.74 billion shares over the past 10 years, which is 31% of the company's total shares. In addition to buybacks, they implemented a dividend program and they paid a dividend of 11 cents, which is 3% per share right now. They returned 4.4 billion to shareholders. I know, buying this for the dividend is not the most exciting. Buying this is for why Buffett's buying it, but it is interesting to see how this is playing out, and maybe SiriusXM, as Steve puts it, could be a cigar butt play with more puffs than expected, as Berkshire adds. That's a hell of a title, dude. Could be a cigar butt play with more puffs than expected, as Berkshire adds. He's talking about butt play there. It's kind of sexual there, but I don't know how Seeking Alpha approved that, given they're so totalitarian on these titles. Nonetheless, that's what we got in the context of the Buffett stock. Vic says, Amit, but their long-term debt is scary. 9 billion in debt during this macro is scary. Okay, 100%. They do have a ton of debt. That's a great point to bring up. Now, I think the maturity rate on that debt is not as high as, I don't think it's 5%. I have to go to the financials to see. But yeah, they do have a ton of debt, which is why they're stuck at $3, right? The company has a lot of debt. There's so many other opportunities. Why would investors invest in a company with all this debt? That makes a lot of sense. So I don't think this is, in the words of Elon, go balls to the wall when it comes to buying up Sirius, but it is something to look at. Why does Buffett own so much of it? And it's something just from a investor perspective, I'll be doing more due diligence. What's going on with this company? What is out there that maybe Buffett sees, or maybe Buffett's dead wrong, right? Buffett's been wrong before, but it's something to at least think about in the context of how much they're buying of SiriusXM. Okay, here's Josh Brown on what to expect when it comes to rate cuts and J-Pow's latest comments on inflation.
Take us to our talk of the tape. What the backup in yields and is whether the playbook for investors needs to change as expectations on rate cuts are firmly reset. How would you address that for the calls that you might be getting at Ritholtz?
So, look, I think the big thing that's happening right now is we're washing out some of the excess enthusiasm that we came coasting into the month of April. If you remember what we were talking about late February and throughout the month of March is the broadening of the rally, and truly it was broadening. It even eventually found its way into small caps, which is a group that honestly can't get arrested. Even those stocks were going up. And now we get a little bit of a washout of some of that enthusiasm, but a lot of big charts are still intact. And what's really changed here on the internals is the percentage of stocks that are in their own individual bull markets. 39% of S&P 500 components are currently above their short-term moving average, 50-day moving average, okay? That number was 90% coming in to April. So it's definitely a correction-ish thing happening for small and mid cap. Large cap, there's not a lot of damage. Apple's actually one of the worst names in a 15% drawdown. Most large caps are still intact. They don't look as bad as Apple. And I think if you were to pull semiconductors out of the equation today, We might even be green.
Are we moving back to a stay big and don't go broad market? So over the last month, or at least month to date, to your point, Russell's down 7.5%. But if you look at other things that are impacted by a backup in rates, real estate's down 9.5%, dividend aristocrats down 5%, staples down 4%, utilities down 3.5%. So do I need to rethink the whole thing right now?
No, because those drawdowns that you're quoting to me are off of new highs in many cases. Like,
that's a good point. What Josh Brown's saying here is the drawdowns we're seeing are off of really like all-time highs. So of course there's going to be a drawdown. It's not like we're at 460 on the S&P and we're going down 10%. We're down 3% from 523, which most people thought we probably shouldn't have been there this early.
Not necessarily real estate, but the dividend stocks, for example, you've had new highs in these segments, and these are stocks that have gone up anywhere from 20 to 50% since the bottom in October. So I don't think that a 5 or a 7% pullback is disastrous. And in fact, you would probably expect it to be part of a healthy bull market. So I don't think we're in this moment where we want to rethink. I think what we do want to do right now is remember, semis are 9% of the S&P 500, 20% of the NASDAQ 100. And let's look at what ASML actually said. It's not great, but it's highly company specific. They beat on earnings, but they missed on sales. Q1 sales were already forecast to drop year over year, but this was a much worse outlook on booking. And booking is how these companies make their numbers next quarter and the quarter after, et cetera. Q1 bookings, 3.6 billion euros. The forecast was 5.4. It's an ASML story. Now, Intel gets hit.
He's right about that. It is an ASML story. I looked at the earnings. I don't think it feeds into the other semis, but the other semis do get hit if ASML gets hit as well.
Nvidia gets hit. And again, remember, semis are a huge part of the S&P. They were never 9% throughout my entire career. And so you're going to have this outsized effect at an index level. But when I look at my screen, I have green. I have tickers that are higher. Defensive stocks are doing their jobs. They're acting defensively. Utilities are up a lot right now. I have pharma names that are up. So I don't think it's this across-the-board rethink. I still think we have enough positive breadth away from large cap that the entirety of the story remains intact. I just think it gets a little bit harder.
Let me just zero in for another moment on dividends, because they're so near and dear to a large swath of our viewing audience, I think. And, you know, we were coming off of a tough year for dividend stocks.
Yeah.
And the narrative coming in was, okay, rates are coming down, so dividends are going to be good. And they're going to have a good comeback.
Yeah.
And now if rates are going to back up, maybe not so much. Maybe those who really spend the time looking for the dividend stocks to get that income are going to have to rethink at least that part of the market.
So, as you know, Jenny Harrington and
I'm thinking of Jenny.
We have a, 7-year blood feud running. I disagree with the premise of let's identify a specific dividend yield and then hope we like the stock that's attached to it. I just don't think the majority of investors are targeting in on a yield and then working backwards. I happen to think the better companies pay dividends, not usually the highest dividends, but the dividends that are most consistently growing from one year to the next. And oftentimes when we're talking about dividends, we're talking about quality, number one, and we're talking about companies that are also, in addition to paying out a dividend yield, doing a decent-sized buyback. That story, I also think, remains intact. We should see $1.2 trillion worth of buyback activity worldwide. It's actually growing overseas faster than the dividend activity is recovering here. You would be understanding, looking at companies in 23 and 22 slowing down with the buybacks and slowing down with the dividend growth. There was a lot of uncertainty, and people just weren't sure how they would fare in a higher interest rate environment. Now we're in one. We've been in one for a while. We kind of know we'll be in one for a while to come, and companies are still looking opportunistically how they can return cash in the most shareholder-friendly fashion. I don't think that theme's going to be extinguished this year.
Basically saying, like, look, companies that have excess cash, we saw this with Salesforce, we saw this with Meta, Adobe. Well, Adobe's doing a buyback. They're not doing a dividend. But if there's so much money there, there's going to be a way to compensate shareholders that want to get yield outside of just capital appreciation. Now, the interesting thing is that if rates continue to be at 5.5, people are going to want yield, and that yield either comes from money market funds, it comes from capital appreciation, or it comes from stocks like a Verizon, like a TFC, like a Sirius, even though they don't have the best dividend, like a Pfizer with a 7% dividend, even though Pfizer is in a tough situation, that give them some type of yield. And so until rates come down, the chasing of that yield is not going to be as dramatic as what Josh is trying to say, because you're getting an easy 5% from your Robinhood, from your money market fund. But as a result, companies are going to have to figure out how to compensate their shareholders for holding on. So for example, Google and Amazon, it would not surprise me at the least if they come out on earnings and they say we're issuing a dividend. Amazon, I don't think will do it, because Amazon, they don't have as much cash as Google, and their operating margins are not as good because it's more retail heavy, whereas Google is just like pure software. So I think Amazon will be less likely to do it. Google has 120 billion in cash. They have the most cash, to my understanding, of all the Mag 7, including Tesla, Nvidia. Tesla's like 20 billion. Nvidia has like 15 billion. So at that point, I think Google kind of, I mean, the market's giving them momentum from that 130 drop, but it wouldn't surprise me if Sundar says, all right, to keep you guys with us and not, super scared to leave because of you're worried about Microsoft or the AI competition or whatever. Here's a dividend. Here's maybe what Zucks did, right? Zucks gave 50 cents. It's nothing on a $500 stock. 50 cents is nothing, but it's something, and something's better than nothing. I think that could potentially happen when it comes to Google. One article I was looking at today as well, Google is going to spend $100 billion over the next 5 years. They reported just in AI research and development. That's pretty bullish, a little bit less than Sam Altman, who wants $7 trillion. But nonetheless, Google's ready to spend almost all of their cash over the next 5 years, right? They have 120 billion in cash. They're committing 100 billion over the next 5 years just to be able to win, or at least be competitive in the AI race. And they're going to need shareholder capital to do that, which means giving a dividend is not the worst thing in the world. You also have to ask yourself, if Google's not giving a dividend, what are you buying, right? You're buying something that's not growing more than 15% year over year. You're buying an ads business that is eventually going to die out, not like, going to flip over overnight, but it's going to see sequential declines as people stop caring about 10 blue links. That's inevitably going to happen. And so you have to ask yourself, well, what is the reason to say? Now, there's a ton of AI cloud infrastructure, and there's so many bull cases to Google, but a dividend, even if it's small, on top of that $150 a share, you get 10 cents, 20 cents to stay. The big institutional shareholders that own, 50, 70, 80 million shares of Google, that's an extra couple hundred million coming to them every year. They would nicely keep that money, and they would nicely keep their Google shares as a result of that. I'll go out there. I'll say, I think Google has a good shot of doing a dividend, dude. I think they do. I'll probably be wrong because I'm saying it right now. I did not expect the Meta dividend, but Google has too much cash to say, oh, we're going to put it into R&D. It's like, dude, you have enough cash to do R&D. I think there might be some form of giving it back. It's just, there's no reason to buy Google for the dividend. There's no reason to buy Meta for the dividend either. The only reason it's good is because if you've had Meta shares for years, then boom, you get an extra 50 cents a share, when money is money. But it's not like, that's an attractive reason to buy the stock. Coinbase here, 213 right now after hours. Destiny Tech ETF, that thing fell 32% today. That one struggled. Bitcoin right here, 61,410. Hopefully this one can recover a little bit over the next coming days, but given the halving event is in 3 days, that one is starting to struggle. SoFi had a relatively good day until the end of the day, as it fell 0.56%, but it was pushing 730 pretty much the majority of the day. Netflix here, 613. Apple, 168. Snowflake, wow, below 150. We were talking about it this morning, that it might fall below 150. Here it is. Snowflake now below 150 at $148. Even Salesforce, 276, down another 0.39% of the day. Celsius is getting interesting, dude. Celsius looks like it's heading below $70. And the interesting thing about Celsius is that Celsius, let's look at a good chart right here. Celsius right here. So Celsius, what am I looking at? I'm looking at $54 in December, and then in January it tanked down to 52 when that Bank of America report came out that said the energy industry is like saturated or whatever. That report tanked the sucker to 52. It was 48 back in October 2023. Then it rallied to 99. They had a great earnings, expanded to New Zealand and Australia and Ireland and Canada. And now the sucker's back at 70.9 off that amended distribution agreement with Pepsi. Does it deserve to be down 20% since then? I don't know. I don't think it deserves to be down that much, but now that the macro's, getting a little tight, I could definitely see Celsius falling below 70 and at least, struggling a little bit. I think that dip will get eaten up because I think the company is just growing like gangbusters, but we are seeing some weakness there for Celsius. So companies that have run up over the past 4 months, they're giving back their gains to the market. We're seeing that with a ton of these companies. And the question is now just going to be, can they recover quickly, or do they have to take some time to recover before the market gets excited to buy them up again? Alibaba below 70 for the first time in a while. At one point, it was 69.69 today, which was interesting, down 1.13%. China liquidity issues, China real estate issues, all of that is still in play. China not really easing up the free market system that a lot of people thought China was going to be able to do. There was a report 2 weeks ago that China is opening up their free markets and that they're allowing a lot more people to to invest essentially in the capital markets. No actual reforms have gone into place, and as a result, investors are just not betting on Chinese stocks right now. We're seeing the weakness same in NEO as well in the context of China. James Chang says, guys, I'm sad today. If you are sad because your portfolio is down, don't worry. My portfolio is down as well. So I'm in the same boat as everybody else. Me and Crossroads talked about this on our Twitter Spaces today. This is a day where you kind of just forget about your portfolio. I mean, look, it's very basic advice, but the core advice is if you know the stocks you own, there's nothing to be so sad about, right? Like if I know a Palantir and I know the potential of a Palantir, potential of a Robinhood, potential of a Tesla, whatever, like it is what it is, right? If you know what you own, then it's not that scary because it's like, all right, well, I'll buy more. I mean, like I know it's such basic advice, but it's some of these days where you got to remember that you are an investor more so than you are, a random person. You have an intelligence level that allowed you to make those bets, hopefully at some decent prices, so there's a margin of safety. And as a result of that, as the stock goes down, you have to assess, has the thesis changed or has the macro changed? Quite obviously, the macro has changed, not the thesis, based on your individual stock. And as a result, it's not something to stress over that much, unless you literally need the money, which you shouldn't be investing with money you literally need tomorrow. Then that's the thing I guess you have to remember when it comes to these situations. Did we have any earnings today? Hold on, let me check. After hours. Today's Wednesday. Did we have any interesting earnings? Tomorrow we have Netflix. Wednesday after close, yeah, nothing. Literally nothing interesting. Kinder Morgan, it's a Palantir client, not that exciting. Discover, not that exciting. Yeah, nothing today. Tomorrow before the open, we have TSMC, and then a couple of banks, a Key Bank, that's a regional, and then Ally Bank, and then Texas Capital Bank and Alaska Airlines. I'm curious if they'll do one because of United. And then after hours, we have Netflix. So Netflix tomorrow is going to be a big one. We'll be listening to their call, and if Netflix crushes, then we should hopefully start earnings season in a good way. All right, that's it for me. Thank you, everybody, for being here. Daily Palantir episode will be out in a couple hours. We're going to be talking about Palantir's relationship with war and defense contracting. It should be a good episode. And I'll see you guys tomorrow, 8:45 a.m. on another market open, and keep it going from there. Thank you, everybody. Have a good one. Have a good day. I'll see you guys tomorrow for the market open. Bye, everyone. Have a good one.